The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.
Hello and welcome to Your Money, Your Call. I'm Julia Lee, and joining me on the panel tonight we have Ben Clark from TMS Capital and also Nick Radge from the Chartist. So if you do have a question, please call in. What a day on the market. I mean, Monday we're down 1.9%, Tuesday we're up 2.6%. I mean, Nick, when we see volatility like this, is it a positive sign? Is it a negative sign? What does it tell you anything?
Generally, when the market's moving sideways like it has been over the last week or two, you'd like to see volatility contract, but at the moment it's picking up. I'm not liking it. I'm near-term bearish. I think we'll have another leg down, just like we saw during May. The big end of town's about 10% off its recent peak. The smaller end of town's about 20% off its recent peak in February. So the move down that recent time was pretty swift, and generally they come in waves of 2 and 3, and we've only had 1. So I think we're seeing a little bit of consolidation, and I think the risks remain to the downside in the short term.
Tom from Queensland. Tom, welcome. What's your question tonight for our panel?
Yes, good evening, all. UGL. I bought into it around 11, keen to buy into it again now. We're about the 680s.
We've seen some pretty significant technical damage. It's been in a downtrend for quite some time, and what we saw recently there, Tom, with that downgrade is what is known as capitulation, and that's when everyone just says, you know what, I've had enough of this and I'm getting out. And that's generally a big gap down, big wide-ranging session, which is what we saw, and massive volume, which is also what we saw. Now that's the first step of a stock finding a bottom. The second step is sideways consolidation, and that generally can take a number of months. So that's where we're at now. So what we want to start to see is that volume drying up. We want to start to see the stock starting to close at the top end of this consolidation, and if that can happen on low volume, then potentially that's your time to buy right there. So I think we're part way through the second step of that turnaround. So I would say at this stage, if volume dries up, it's going to start looking okay.
Okay, so that was UGL. It's been a pretty turbulent ride, but Ben's saying that this earnings season could be a key, so just wait, make sure there's not a second downgrade coming through. And Nick's saying that, there has been capitulation, so potentially looking for a turn in the trend first. Let's go to our next call. I've got Jay on the line from the Gold Coast. Welcome to the program. What's your question tonight?
Billabong. Is it a buy? It's gone up 2 cents since yesterday. I know they've had some financial problems.
Sure, so having a look at Billabong and Fortescue there. Let's start off with Billabong. I mean, that stock price chart says a lot, doesn't it, Nick?
Yeah.
Has it stopped falling? I mean, is there anywhere more to fall?
Yeah, it's not a healthy-looking chart in any way, shape or form, and there's still a lot of selling going on there at the moment. We can see that, for example, if we go back to around early June, we had that big leg down. Prices gapped lower, tried to trade higher on large volume but closed weak, and that's a sign of selling. So I think what you're going to see here is any strength is going to be sold into, and until that finishes, this stock's not going to be able to turn around. So I'd certainly be steering clear. I think the risks, dare I say, can still be on the downside.
What's your question tonight for our panel?
Hi, Julia. I was after a technical on both Alicia Gold and Oceana Gold.
Okay, so
I'm long and in trade, long and in profit on both of those. So I was just wanting a short-term outlook from Nick, please.
Sure, that's a fantastic job. It's been a long time since I've heard that someone's actually in profit and long on gold stocks. So having a look at Alicia Gold, AQG is the stock code there, and Oceana, OGC. Nick, what's your view?
Well, it's been trending down. It's trying to find a base here at the moment. Volume's drying up, which is also a good thing. I'd like to see it just pop its head up through around that 280 level to give me a little bit of confidence, but certainly some very good support down there just below $2. If it can move sideways here and then break up through that 280, that would be worthwhile adding to that position right there. You've obviously bought in at a very good level, so well done on that. But yeah, a little bit of resistance at 280. If we can get up through there, it should be looking much better.
So Oceana Gold, what do you think?
Yeah, well, again, you've obviously bought into that very, very good levels. It's a bit of a V-shaped bottom there at the moment, which doesn't tend to be overly sustainable, but we might get a little bit more upside. We're certainly pushing higher on higher volume, which is a good sign. So let's see what happens when it tests up around that 175, 180. If it's going to stall, that's where it's going to happen. So if we can get up through there, be pretty happy with that. My feeling is it's probably going to go into more of a consolidation range between that 115 and 170. So that resistance is an area to be watchful for.
And Nick, do you have a view on Brickworks at all?
Yeah, very low liquidity stock there. It's broken through some good resistance around that 1150, pushed up to 13, come back to test that. What was resistance is now support. That's always a good sign. We could set ourselves up for new range trading here between 1150 and up to the upper end of the range around 1470, something like that. Historically, the stock has always stalled up around that 1470, 15 area. So if we go into that range, we're near the bottom end of that range now, and that's probably a reasonable play. So buying around this 1150, 1250 area, looking to hop out at 1475, $15.
Okay, so that was Brickworks. Let's go to our next caller. I've got Peter on the line from Sydney. Peter, welcome. What's your question tonight?
Oh, hi, Julia. Thank you. Nice to talk to you. I am interested in NEA Map, NEA, and also EAX, the electricity sort of business.
We might actually go to a technical view first. I mean, having a look at NEA, and if we can get the stock chart up, it's a pretty impressive looking chart.
Yeah.
I believe it's a technology company. They look at mapping technology. What's your view on this one?
Well, it's certainly come a long way very quickly. It wasn't so long ago it was trading, sub 10 cents, and it's now up around that 30-cent mark. And interestingly enough, it's obviously attracting a lot of attention of the traders, because volume has started to pick up quite dramatically, as has volatility, and that's what tends to happen. The stock's quite sleepy for sometimes years, and then it comes into play, and that's what's going on here in the moment. So it's certainly chopping around, quite volatile at the moment, has a tendency to trend well when it gets going. But keep an eye on that volume, bit of selling in there today, Peter, so it looks like it'll probably try and consolidate a little bit further, but trend's certainly up without a doubt. EAX, yeah, a bit of technical damage going on there at the moment, Peter. It's been trending very well and consolidating. We always like to see that consolidation, but it's broken through the downside. Now, the last time it broke through the downside, which was back in February, we were met with a lot of buying demand, and the stock was able to hold that support. Now, this time around, we're breaking down and closing on the lows, so the buyers aren't sitting there at the moment, and that's a little bit of a concern. Technically, damage is being done. Probably wouldn't want to see it go any further lower than what we're seeing here right now.
Buru Energy, just want to know if it's a good time to buy them, where you see them going, and do you think they're a good buy at the moment?
So Buru Energy, we've seen a massive decline. It was one of the best performing stocks on the market at one stage, but a huge fall. Is it a buying opportunity? I mean, going and having a look at the charts first, Nick, what's your view on that?
Sure, but how often do we see that? We see these great stocks turn around. MC, Matrix was one of those ones touted by everybody, and, it just turned around and dropped. And same kind of thing, our momentum model, our growth portfolio, got us out of this stock at $2.90. It went sideways and it started to trend down. The trend is firmly down at the moment, Stan. From our perspective, being trend followers and momentum investors, we're just not going to get involved in this in any way, shape or form. There's significant support down around that 50 to 60 cent level. I'm not saying it's going to go there, but certainly, we've come from $3.50, we're now down at $1.23. It's only going in one direction at the moment. No signs of a turnaround for me.
I'm trying to moderate my portfolio more towards growth from income. Not totally, but partially. And I've been having a look at the health stocks, because I don't have any in my portfolio at the moment. They all look very overpriced, and they've had a great run over the last year, as you're probably aware of. And I thought ResMed might be reasonable value, except they don't give anything to shareholders, or very little. And but they do have exposure to the US, and I think this is probably a bull point. Also, QBE is another one that I've been looking at also.
Completely agree. They both look good. ResMed, we're holding in our growth portfolio from September last year. Trends firmly in place. Interestingly enough, Michael, we had a bit of a dip in the stock back in early June, and that was met by good buying demand. And today we went a little bit down towards that level again and popped straight back up. So looks like there's good buyer demand in here at these kinds of levels. And it might consolidate for a little bit longer, but it certainly looks quite good. QBE, I agree. I've liked QBE for quite some time over the last year. It's now got itself up through that resistance, and again, like many stocks, having a nice consolidation, and if we can break up through that, which I think we will, it looks pretty good. I like both.
From CSR, but once again, exposed to that residential construction space. What do you think of the charts?
Yeah, the charts are looking quite good. There's a big line of resistance right where we are now, and it's just testing that at the moment. So, yeah, look, it looks pretty good. I think if we can lift our head up through that sort of 230 level, you just have to run with it. It looks good to me.
Okay, it is time for a viewer email. So this is the first email of the night. It comes from Jim, and Jim asks, I'd like the panel's assessment of Mirabilla Nickel and whether it's worth buying as a long-term hold. So having a look at NBN is the stock code there, and we might start off with Nick. It, of course, has taken an absolute hammering in 2013.
Yeah, it's... doesn't look particularly promising. Our main momentum model, our growth portfolio, exited that position at 46 cents. We're now trading sub 10 cents. So momentum is clearly down there. There's absolutely no signs at the moment that's going to turn around. The stock was down 18% today and on high volume, low close. So I think there's a few people here starting to say, you know, we tried to buy it earlier on around that 10, 15 cents. It held up, and now we're breaking down through that. I wouldn't be surprised to see a little bit of capitulation if today wasn't some of that capitulation. So I'd be very cautious right here because you might get some other people dumping it. High volume down days, probably the start of something a little nastier. And once that's finished, that's probably your time to buy, but certainly not now, not in my opinion.
Profit on Newcrest. So Raj bought into Newcrest Mining in 2007, and obviously there's no profit. The share price has absolutely
Raj,
tumbled.
you got it back to front.
Oh, he might have been shorting the stock.
Yeah, maybe.
Then, you know, he would have been booking a beautiful profit.
Thanks, Julia. I'd just like to ask the panel about Magellan Future Fund and Magellan Financial Group and what they think of both of them, and if okay, then which one they think is the better one.
The charts just look fabulous. We're riding both of them. We bought MFG back at $2.30 in August last year, purely on momentum, and we continue to hold that position today. Nice consolidation right here at the moment, Leslie, and that's a very positive sign. And I think if it can break up through that sort of $10 level, that you'd want to add to that position or jump on board. So remember, the market moves up in trends, consolidates. We're having that little consolidation now in MFG, and I think it looks pretty good.
It's time to start the stock watch, and this time, Nick, what are you watching? Your time starts now.
Okay, my stock today is NXT, Next DC, which looks after databases, I believe. I don't know, but it's got very, very good momentum in it at the moment, and it's at all-time highs and consolidating nicely. And as I just said, when the market moves up in trends, it doesn't just go in a linear fashion. It moves up, sidesteps for a few weeks, and then moves up again. So NXT is having a nice consolidation here at all-time highs, and that's exactly what we like to see. So if it can break...
Just wondering what Coca-Cola's going to do, because it's well below its 12-month high.
Sure, this is an interesting one. Coca-Cola sits in the staples space and often thought of as a defensive stock, but not after that profit warning that we saw not too long ago. So, I mean, Nick, looking at this particular stock, it looks like, you know, a new region for its share price action. What would make you more positive on?
Yeah, I mean, that's your classic example of capitulation right there, Stuart. You know, big sell-off, big volume. Interestingly enough, the second probe down to that $11.50 area was done on low volume. So the follow-through selling's not there, which is a good sign. So, you know, I think those that are holding it at good levels are happy to continue to holding it. There's no sign of real good, solid buy demand coming back in, so we might continue to see some consolidation. But it's got a little bit of recovery to do. It's basically gone from a 52-week high to a 52-week low in the space of, you know, 1 month, and we're at the lower end of that range at the moment. So, look, there's no definitive signs it's going to start turning higher right now, but it might start consolidating, and once we've seen that, that'll be a healthy sign. A break to the upside, you'd go with that.
Yes, my question to the panel is about a stock called Buccaneer Energy. The code is BCC. Thank you.
So having a look at Buccaneer Energy, I believe they are in Alaska's Cook Inlet. So looking at the technicals of this one first, I mean, I guess the question is, why would you want to be in Alaska? And it seems as though, you know, there's a strong incentive for oil and gas companies there. ConocoPhillips is there with a 1.5 million project, and they're looking for gas as well. So, but, you know, look at the share price.
Well, I think there's your answer right there, you know. Why do you want to be in Alaska? And some people are obviously saying, well, you don't, because that's what the share price is showing you at the moment. At the end of the day, really, from our perspective anyway, price is all you've got to look at. So that's at significant low points right here at the moment. There's a little bit of resistance sitting there at about 4.1 cents, but even so, you know, the stock, if it was to break up through 4.1, it'll just rotate a little bit higher, maybe to 6 cents, 6.5 cents, something like that. But it's not a stock that historically has trended very well. It's been sort of in a broad range for a long, long time, and it's actually below that lower side of that range at the moment. So a little bit concerning, sitting right on resistance right here. There's nothing in it for me.
It is time for a viewer email. Let's go to Howard. Howard asks, can the panel give me their views on CSL? Should I continue holding the stock? Nick, are you bullish on this one, or time for a bit of caution?
No, not at all. I think it's quite funny. We spend our lives trying to find stocks to buy in the hope they'll go up, and when they go up, we're just trying to get out of them. You know, it's doing the right thing. It's been trending well. Our major momentum model, the growth portfolio, has held this stock since March last year at $33. The trend is up. We're continuing to hold it. Why would you want to sell it? It might consolidate here, but that's a positive thing, and if it should keep moving on. So, you know, keep holding it, or if you don't have any, there was your dip to buy it, and see if this consolidation can get you back in.
Yeah, I'm a shearer from around Horsham, and I was talking to a few farmers the other day.
Sure.
And they reckon there's going to be too much grain around, so I was just wondering what your thoughts were on GrainCorp.
Okay. It's a good question, GrainCorp, because at the moment, I guess, overshadowing its underlying business is the fact that there's a takeover offer on the table from Archer Daniel Midlands.
What we do, Brett, when these situations come along, and it's not really relevant to what you're saying here, but if we're holding positions that come under takeover, we'll sit on the position for a maximum of 2 weeks. Generally speaking, if there's going to be any further takeover offers, it'll be very, very quickly. And if not, then we'll exit positions and put the cash to use somewhere else. And GrainCorp's a good example. You know, you've got a stock here that's sat at basically $12.40 since December last year. So that's a lot of money just sitting there for not much upside, as Ben said. So we'll actually get rid of the position, override our systems, get rid of the position and put that cash to use somewhere else.
Good evening. Thank you for taking my call.
You're welcome.
Just a quick one on Azure Minerals, please, from the panel. That's AZS. Thank you.
So that's Azure Minerals. AZS is a stock code. We'll go to Nick first on a technical view. They look at precious and base metals in Mexico.
Yeah, Jason, this is one of these stocks that moves very, very quickly in one direction and reverses and moves back the other direction just as quick. So you've got to be quick in and quick out. It's not the kind of stock that we'd like to pursue. Doesn't trend particularly well. I'm not sure what happened a few days ago. It jumped from, what, 4.5 up to 7.2 cents for some reason, but it's come straight back again. So very volatile. Looks like quite low liquidity as well, which exacerbates that. Not one for me, I'm afraid.
And on that note, that's all we have time for today. Thanks so much to our guests tonight, Ben Clark from TMS Capital and also Nick Radge from the Chartist. And to you, our viewers, for all your calls and your emails tonight. Until next week, I'm Julia Lee. Have a great night.